Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session where we are seeing good gains come in for the market, so no real concern which has come in for today's trading session, and we've really followed what the global markets threw up for us overnight, the US markets as well as the Asian markets. So it seems as though we are in steady state. We have the Nifty, which is at record high, so up around 1%. The Bank Nifty, which has gained around 0.8% and has done well on a week-to-date basis as well, along with the mid-cap index, which has underperformed week-to-date, but nonetheless holding steady with a gain of around 0.7%. The advance decline ratio has remained steady through the trading session, favouring the advances. Hi, Vinny.
Absolutely. Hi. Good afternoon, Ekta, and a very good afternoon turning in for the markets as well, right? Nothing to complain about today. Ending the week on a good note is what we're looking at in terms of the market as of now. But on that note, let's get started with all your stock-related queries. And joining us today are experts. We have Shahina Mukadam as well as Vaishali Parekh on the show. Very good afternoon to both of you all. And let me start with the first query. This query is a long-term query coming in from Deep Shah. This is from Mumbai. He's holding 3,000 shares of AB Capital at around 197 rupees per share. Currently, AB Capital trading at 227, so clearly making some bit of a profit there. Now, he wants to know that whether he should continue to hold this for the long term or maybe look to sell, book out profits. Shaina, what's the word on this?
I would say you should continue to hold. Recently, they have got the approval to merge their finance business into AB Capital, that is Birla Finance into AB Capital. Of course, that doesn't change anything in terms of the equity capital, but it just strengthens the overall size that AB Capital can work on in terms of the finance business. And this accounts largely for about say 55-60% of their total revenue. Others being your housing, insurance. I think price to book, it's pretty decent, attractive, is just about 2.2 times, which is not expensive. So I would say you can hold from current levels.
Okay. All right. Well, Vaishali, what would your view be on Aditya Birla Capital? 12 months, the stock has given returns of over 20-odd%.
Very good afternoon, all of you. Yes, so the trend is very much intact. It is in the positive territory. Even of the larger term time frame, if I'm looking at the weekly and the monthly, the trend is quite intact. So, well, we have the support levels also pretty close. The support levels lie at 200 levels. And from there, that's where we have seen the new round of momentum begun. So, I would say 243, 245 levels need to be crossed, and then later after that, once we see a consistency in these levels, we can see a target of 270 also. So view is positive and buy on dips with a support of 200.
Okay, all right. That's on Aditya Birla Capital. We now have Lakshmi, who writes to us from Visakhapatnam, holds around 500 shares of IndusInd Bank, which is bought at around 1460, so sitting on a profit on that one, and wants to know what to do, whether one should hold their shares in IndusInd or exit at current levels. Well, the Bank Nifty itself has done well. Frontline stocks such as IndusInd, what would your view be on that on a longer term basis, Shahina? Is this a portfolio stock that stays on to that one sticks on to?
Yeah, the stock has actually, been consolidating around these levels, and the valuations are not expensive. It's just about 1.8 times book 1 year forward. For the size of IndusInd Bank is definitely interesting, and the management has said that they will grow about 15 to 17% in their loan book, which looks good at current, currently their CD ratio is about 85-89% in that range. So they would be able to bring it down a bit more, growing very well. Their NIMs are pretty healthy. So I think at current levels, it would be a hold.
Okay, current levels would be a hold, but Vaishali, what's the word coming on the technicals, right? Because when you're looking at it, YTD, IndusInd has not managed to perform much in terms of a move. 7% downtick actually is what we're seeing. What are you looking at it in terms of charts?
So I totally agree that IndusInd Bank has not performed the way the other private sector banks have. And I would say right now we would just take it as a trading strategy. Technically, it is in a better spot because it's sustaining above the 200-day moving average. we've seen the run-up coming in, and this is the level where it's just consolidating. So we would say it needs to cross 1530. That is the next hurdle. So once we see the stock moving above 1500, 1530 levels, it brings us furthermore conviction and clarity that it can go towards 1580 to 1600 levels. So that's how we would be looking at it. Does it? For now, it's absolutely in the trading zone.
Okay. Keeping an eye out on these levels there. But let's move on to this next query. This one is from Vidya, who's writing to us from New Delhi. Now, he wants to know, he's holding 80 shares of Coal India at a price of around 503 rupees per share. Wants to know whether he should continue to hold this or maybe look to sell. And, let's not forget that today we did have a brokerage note coming in from Macquarie on metals, where they've actually raised the target price for Coal India to 541. Shahina, what's your view coming in for Coal India? Would you suggest that the viewer continue to hold Coal India?
Yeah, see, Coal India, the valuations are extremely attractive. It's just about 4 times EV to EBITDA, which is like a very good stock to hold in terms of valuation. Also, if you look at the, I would say the business coal prices have remained stable over the last 1 year. They are operating at about 100% capacity utilization. So to that extent also, business operations also going well. And valuations, as I mentioned, were good. Lastly, I think in terms of overall performance, the stock has performed. But even from here, I believe there is an upside that one could look at if you're holding for the medium term. So definitely you can hold. Of course, the longer term, you have to keep reviewing this stock, because while it is a high dividend paying stock as of now, one needs to look at it because, yes, there is a shift from fossil fuel to green energy. So to that extent, I wouldn't call it a portfolio stock. I would call it more of a dividend play.
Okay, you would call it more of a dividend play as compared to a portfolio stock. But what is your sense on this one? What would your view be on the technicals?
Sure. So the trend is good. Right now it is in the consolidation phase. So unless and until the levels of 475 break, the stock is likely to surge high. Today also we are seeing good volume pickup and good momentum kicking in. So we need to have a clarity once the stock sustains above 505. I think this is ready for a target of 540 to 560. So risk reward ratio right now from here on also is very favorable. With 475 as support, this can be looked into for 540 target.
Okay. 540 target is what one could watch out for from Coal India, and obviously a dividend play that comes in there. But let's move on. Next query is from Sagar, who's from Mumbai. He's holding shares of Nuvama Wealth Management at a price of 143 rupees per share. I beg your pardon. He's holding 143 shares at a price of 4,750 rupees per share. Wants to know whether he can continue to stay invested in this one at the current levels. What's the view on this one? Vaishali, let me take it across to you first. What are you watching out for? Because viewers currently making a good amount of profit here.
Well, definitely actually continue holding, because I see no sign of fatigue right now. The indicators are also showing that there is still scope for further upside. So I would say, since he's already sitting on such a good high level of profit, 6,400 should act as a trading stop loss and look for a target of 7,300 to 7,500. That's how I would look at this stock, because, well, very, very strong build-up coming in even at these levels.
All right. And what about the fundamentals of stocks such as this, Shahina? Nuvama Wealth Management stock has already given returns of around 92% on a year-to-date basis. So fantastic performance. What would your view be, Shahina?
Yeah, the stock performances actually trailed their fantastic financial performance. If you saw the first quarter numbers, you had an overall growth of revenues of about 87%, profits more than 90%. So I think to that extent, in terms of valuation, while it remains expensive, the growth, and especially if you talk of wealth management companies across the board, and also Nuvama, the growth has been so phenomenal that, it is better to continue to hold. You could hold for the medium to longer term. Shorter term, you may see some bit of...
All right, Shahina, there's some disturbance in your audio, so we're just going to come back to you in just a bit. But that's a view coming in on Nuvama. That stock has given returns of around 90% on a year-to-date basis. Just want to point out for the markets, there are specific stocks which are doing well. So Marksons is doing fantastically today. That stock has picked up around 12% in today's trading session, over 300 odd rupees, gained over 90% this year itself and around 29% just in the month of September. So very well in today's trading session. We'll take a short break on that note, but more queries on the other side. Stay tuned.
Welcome back. You're watching Your Stocks on CNBC-TV18. Let's move on and keep it going with all your stock-related queries. We have Shahina Mukadam as well as Vaishali who are still connected with us to stall all those queries of yours. But let's move on. This query is from N. Ramesh, who's writing to us from Hyderabad with an investment query, and this is to buy Varun Beverages as well as Skims. For the long term, what is the view on both these stocks, and fundamentally, how are they looking, Shahina? Shahina, this one is for you, and this query is from Ramesh. He wants to know whether he can look to buy Varun Beverages and Kims for the long term.
Well, he can, but I would not suggest to buy it at current levels. I suggest you buy it at dips, because if you saw last week, both the stocks actually have gone in and had splits. Varun Beverages had a 2:5, and Kim's had it become a 2 rupee share from a 10 rupee share earlier. So basically, if you saw the correction in the price of the stocks, it is not actually totally factored in this split. Secondly, in terms of valuation, both the stocks are expensive at current levels. Kim's, because of the heavy expansion that they are doing, they are adding almost about 300 beds that would come in operation by the end of the year. So in the current year, it's going to be a bit expensive because you're going to see some bit of pressure on the margins, and growth likely in terms of revenue will fully reflect next year. Valuations are extremely expensive. In fact, Varun Beverages, the valuations are more expensive. If you see 1 year forward, valuations are almost about 70 times, multiple. And if you look at the growth in terms of overall revenue growth, we are talking of volume growth double digit. So I think the stock has, moved far ahead of the numbers that are coming out. Yes, but they're good quality stocks, not at current levels. Buy it if you get any corrections.
Okay, Vaishali, what would your view be on both these counters, Varun Beverages as well as Kims, both from different industries?
Definitely. So Varun Beverages, I think it is already gone quite high. So I would say, wait for a little bit of a dip, because 600 would act as a support. So either you accumulate, because if it retraces it to 600, then there will be a little bit of erosion. So 600 is an ideal support level. So somewhere closer to that, because long-term chartical projections, what we look at is around 680 to 700 levels. So I guess accumulation would be a better strategy. And as far as Kims is concerned, we've seen a perpendicular rise right from around, I think, 400, in fact, 380 levels in one way. So I would say now let it retrace a bit towards 500. 500 would be a better level to get into the stock for higher targets.
Okay, all right. 500 would be a better level for Kims to get in for higher levels. Now we have Maulik, who writes to us from Ahmedabad, holds around 50 shares of SBI card, which he's bought at around 800 odd rupees. And he wants to know what to do, whether he should exit or park his money in this particular counter. So he's asking about SBI cards in particular. What is your sense, Shahina, on this one?
Well, I suggest that, he either switches from SBI cards, he can switch to even something like SBI, which I prefer, or he should exit. Basically, if you see, there's a lot of pressure coming on in the overall card business. RBI is putting in a lot of new norms that they are being affected. Also, businesses, I think in the longer term will be affected by a lot of new transmission and transfer methods of, like, for example, UPI. So to that extent, business overall will slow down if you take the longer term, and valuations are not cheap. So I would suggest a switch.
Okay. Valuations are not cheap. Business could see a slowdown. That's the fundamental word coming in on SBI cards. Vaishali, is your view on the technicals also similar for SBI cards?
In fact, there is some improvement which I'm looking at on the weekly chart as well as the daily chart. So I would say, well, of course, if one has to get into the trade, it always has to be a disciplined level-wise trading. So I would say right now it's at 783. So keeping in mind 765 levels as a stop loss, this stock can be considered again to look for a target of 800 to 820. So that is how, even on a weekly chart, after a very long consolidation, the stock is showing some upward move. So I guess for now, 800, 820 should be the target that one can look into and keep a stop loss of 765.
Okay. All right, so that's on SBI card, but we now have Srinivas, who writes to us from New Delhi with an investment query. He says he wants to invest in Singin International for the longer term and wants to know whether it's a good idea to invest now or not. Well, Shahina, you know, the debate with regards to the Biosecure Act, how beneficial it is going to be for a company such as Singin is ongoing, but they seem to be quite bullish on it. What's your sense? Do you think that it's a long-term play? One should probably look into it?
Yeah, I think so. I totally agree with you. You know, this act is going to be a positive for Indian companies in the medium to longer term because it is going to be China plus one. The act is specifically made to, the companies in the US and developed markets to actually outsource from other countries other than China and some of the other, Asian countries. So to that extent, India will benefit. And Syngene, of course, is in CRAMS, it's one of the leaders. If you remember, 2 years back, they tied up with a company called Geotis, and which is a $500 million order over a 10-year period. So I believe, while of course we didn't see very good performance in the first quarter, as time goes, I think it should start reflecting well in the numbers. And I would suggest that, if you're buying, you can buy it, but do keep stop losses in this volatile market. It is always better to hold with a stop loss.
Right, and Vaishali, what's your word coming in for Syngene? What are your expectations on the technical front?
Well, I would say that not at all a good buying opportunity at this level because it's already run up. But to those who are holding, should continue because I'm looking at it even on a monthly basis, it's showing a lot of good uptrend. So it makes sense to hold. But if one has to buy, then wait for levels of 880 to 870.
Okay, all right. We now have Lokesh, who writes to us from Mumbai. He holds 1,500 shares of Vodafone Idea, which he's bought at 13.35. Will it go down more? Some brokerages have put a target of as low as 2 rupees. I think that's the big concern about Voda Idea since yesterday, about what the future is going to look like. There was a decline in terms of the addition of subscribers, in terms of the telecom data that came out today. But separately, the big problem is the debt which is looming. So from that perspective, Shahina, what would you recommend?
I would say it is better to exit. There are a lot of negatives that have come about. The Supreme Court judgment that we saw 2 days back, there, on the balance sheet, it's going to be a huge amount of additional stress, not to mention the huge debt. So all these things more or less, offset totally the 18,000 fundraise that they had done. So it is really risky. It's like, you just have to sit and wait and hope some M&A happens. But it's very risky at current levels. So it's no point in holding. Better if you have funds to invest in the sector, either invest in Reliance through Jio, you get a better opportunity to play into the telecom segment, or even Bharti Airtel at declines, because the stock has rallied. I would prefer, in terms of valuation, let the stock correct and you can invest.
That's the view coming in on the telecom side from Shahina. But that was the last query for today. So thank you so much, Shahina, as well as Vaishali, for joining in with us on this show and solving all our viewers' stock-related queries. But with that, it's a goodbye from Ekta, myself, as well as the team who put this show together. Don't go anywhere. Closing bell will take the action forward.